please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The SGX Nifty is indicating we'll have a flat start. Most of the Asian markets are flat, but with minor positive bias. Of course, for us, the point here is that crude prices are also above 71. So, how will that impact our market? Ashwani Gujral, Sudarshan Sukhani, and Mitesh Thakkar with us. Good morning, gentlemen. Ashwani, your thoughts first. We have had 3 or 4 back-to-back good days for the markets. Do you think the uptrend remains? And first trade in the morning, is it on the long side?
Well, good morning. The market is, now stalling, and given the way SGX is behaving, I think we could have another fairly narrow range days and maybe a collection of narrow range days, because overall the market looks strong, just has resistance at higher levels. So maybe a 100-point range on the Nifty may not be out of question. Similarly, Bank Nifty 24,800 to about 25,200. So that way, while the bias is positive, I don't think today there is a great index trade in the making.
Okay, so no index trade at all. Mitesh, good morning to you. You concur or will you trade the indices?
Yeah, good morning, Lata. I think we've been highlighting 10,430 as some kind of a pivot level to watch out for. I think the next long trade will happen if we conquer this level decisively, which means that we have good strength going about 10,440, 445, and then you take a 30-point trade. Look for targets of 10,540 to about 10,600 on the upside. If that doesn't happen, which is a good chance given the fact that we've had a rally for the last 4 or 5 days, then I think it could be a 1 to 3 days kind of consolidation, and I think then it will be buying on dip. So I would want to see how we open and if there's any follow through about 10,430. If not, then you wait it out.
Okay, all right. So that's Mitesh's view. Let's get in Sudarshan as well. Morning, Sudarshan. You were telling us yesterday itself that you were getting a little cautious about the long positions. What is the view today on the index?
Yeah, good morning. Yes, the markets are now coming to a point where they can stall for some days. That's about 10,450. That's an approximate band in that area. So the trend is still up. So I don't think I'm confused about the trend. We are in an uptrend. But if the markets chop around for 3 days, 4 days here, then holding any position becomes a little meaningless. So the trade is, if you find a significant dip intraday, go long and hold that position, carry it over, but don't get involved in these small moves that can come today. So that significant dip is somewhere, if we reach somewhere around 10,350 in the cash index. Don't be rigid about the number. It could be 360, 365. Then we go long in the Nifty. Otherwise, we keep waiting for that consolidation to get over. Okay,
fair point. Let's discuss individual stocks then. Ashwani, before we discuss your list, thoughts on how to approach ICICI and Axis after yesterday's big move, and of course your individual stocks.
This is a macro event in the life of both these stocks. I mean, how many times in the last 20 years have the CEOs been fired? So this is a seminal event, and why? Because this may be a turning point in a longer term history of these companies. Because if somebody comes in and like what Sobti did with IndusInd, etc., and that starts to take shape, these guys can get back to 2 times, 3 times book at some point. So it's that sort of buying opportunity, and those are the kind of people who should buy into it. But I think the strength of this first rally means that even if you consolidate for 2, 3, 5 days, I think there will be a second leg on the upside. And, people who hold these short-term positions should continue. Even if the market corrects, chances are these stocks could still be higher than where they are.
Okay, fair point. And therefore, your stocks, Ashwani?
Well, JSPL is a buy with a stop of 238, target of 254. Maruti is a buy with a stop of 9200, target of 9450. Balkrishna Industries is a buy with a stop of 1260, target of 1300. Titan is a buy with a stop of 957, target of 980. And Larsen is a buy with a stop of 1335, target of 1380.
It's an all buys telling something. Yeah, absolutely. Going with individual stocks there. Ashwani. Mitesh, your stock list and actually a call on the banks as well, whether you're expecting this to sustain on ICICI and Axis.
See, I think both ICICI and Axis, they've turned the corner in the short term. So I do expect further rallies, but they've gained in the last 2 days, so maybe a 1-2 day of pullback can happen. But for me, both will be buying opportunities. I think on Axis Bank, I'm looking at target close to about 565 to happen immediately and possibly even higher levels in the medium term. Similarly, if I come to ICICI Bank, I would have a targets of around 306.7 to begin with, and once that is being crossed, 329, 330 can happen on the upside. So decent upside is still left in both these stocks, but after 3-4 days of strong pullback, maybe they'll have 1-2 days of consolidation. Coming to my stock ideas, I have 2 stocks from the L&T group. L&T Finance, I think, continues to be on my buy list. The indicator setup is quite positive. Buy with a stop at 166, look for targets of 185. Yesterday, L&T broke above that pivot of 1345, so keep a stop below 1335, look for targets of around 1385. 2 more buy calls. I have a buy on, one more buy call. Ramco Cement is a buy. It's given a swing breakout, so if it gets past yesterday's high of 820, buy with a stop at 802, look for targets of 860. And a solitary sell on Strides Acolab, that's a sell with a stop at 661 for targets of 625.
Okay. What about the power stocks, Ashwini? I mean, I know they're not the flavor of the season or anything, but if you look at the April performance, GMR Infra, REL Power, Adani Power, JSW Energy, these are the guys with, 10 to 25% gains, albeit penny stocks. Is there any trade there at all?
See, maybe these are the sort of stocks which can now move, now that the market knows that, okay, some sort of bottom is there, and while large caps take a day off, they could go up, but these are not sustainable moves because these are basically ranging moves. They'll get to the top end of the range, again start to fall. So the best stocks to trade are stocks which are at fresh highs, as the market is still way away. These are the stocks where excess buying is visible. I heard yesterday FIIs bought. Which stocks did they buy?
Axis.
They bought stocks, where there is momentum, like Axis, ICICI Bank, or Titan, Jubilant, etc. I don't think they went and bought GMR.
Fair point. Sudarshan, good morning. Let's discuss your list as well. You have 3 buys and 2 sells.
Yes, because the sells are only intraday. If markets are choppy, they'll give some opportunities. That's Kajaria Ceramics, a stock that's falling relentlessly day after day. That's a short sell. And Bajaj Auto, which hasn't participated in the market rally at all. So 2 short sells only intraday. The buying theme is starting with TCS. We are buying in anticipation of the results for Infosys. TCS has been in a trading range for 3 to 4 days. That range should break on the upside because the trend is up. So that's the first buy. The second is RBL Bank, a very attractive bullish head and shoulder. A very attractive bullish head and shoulder has already been confirmed here. It's a day trade. It's also a positional buy. Similarly, United Spirits. Both RBL Bank and United Spirits have come in my list earlier. United Spirits has a similar pattern, deep correction, base building, bullish head and shoulder, breakout on the upside. That's a day trade, a positional trade. And I'll quickly add something about ICICI Bank. The charts for ICICI Bank, bottoming out charts, are much better than Axis. So ICICI is a buying opportunity.
What about PSU banks, Sudarshan? I know you congenitally hate them, but is there any pattern at all in terms of them likely to climb further or not?
Well, Alata, I was always afraid you'll ask me this question. Okay. There are bullish patterns all over PSU banks, bullish patterns. The one that I talked about, RBL Bank, similar patterns are available. They are also getting confirmed on the upside. For some reason, I am not able to recommend and buy them, but the bullish patterns exist and are confirmed.
Now, I asked you with a reason. If there is bullishness in ICICI and Axis and bullishness in the PSU banks, then that gives me a feeling that the Reserve Bank will relent on NPA norms. I hope they don't. I hope the charts are wrong, but anyway.
Okay. Well, gentlemen, thank you for all the morning calls. We will keep coming back to you for some more ideas and, of course, looking at the trade setup closer to open. Right now, it's time for a CNBC TV18 exclusive. Kritika Saxena caught up with the management of Arvind. She began by asking the company about the growth outlook as well as the brand's business in the year to come.
If you see the kind of growth which we have for brands, on almost a 4,000 crore base, we are growing at 20%.
Yeah.
And in textiles, on a base of 6,000, we are growing by around 8 to 10%. around 6%, but we intend to grow by 10 to 12% or 15%.
Okay.
So these will be the two major growth drivers.
I want to understand the outlook for Anup Engineering. So let me bring you into the conversation, Puneet. In terms of the scalability over here, in terms of the kind of revenue growth and target that you can look at, tell me what you have in mind, even from a margin perspective. Once the demerger does go through, once the listing is done, what's the scalability that you have in mind?
So there are, two steps to the story. I think for the first step of taking the business from where it is currently around the 200 crore mark, going to the 1,000 crore mark should not be, difficult in doing exactly the same things that we've been doing. So more of the same can get us to 1,000 crores. So the next...
By when?
In the next 3 to 4 years,
3 to 4
I would
years.
say.
Arvind Fashion's 3-year target from a number perspective?
So we are looking at achieving a 9,000 crore number in 5 years. So it's around a 20 to 22% cumulative growth rate moving forward, powered with the current portfolio we have.
Kulin, the kind of power brands that have come into India through Arvind have been significant. How many by 2020? What's the target that you have in mind?
So we already have, 4 brands that we ourselves call power brands, which are more than 300 to 400 crores. I think we would be adding 4 more within the time frame that you mentioned.
Within 2020. Okay.
We will have around 3 to 4 brands which are more than 1,000 crores by 2020, and we will have 3 to 4 which are more than the 300-400 crore mark by then as well.
Are there any businesses that you would want to look at divesting? Are there any areas where you would want to consolidate?
Not as of now, because each one of them is having extremely good traction. See, another thing which is happening is that when we are segregating these businesses and letting them go on their own, we have a set of investors who are interested in that business.
Kulin, any newer areas within real estate?
The theme for us is we've kind of delivered around 2.5 million square feet over the last 5 years. We're into a strong acceleration, so much so that in the next 3 years itself, we are going to be delivering 8 million square feet.
Important set of fundamental cues today are going to be the commodity cues. We discussed crude, of course, but we didn't get our commodities editor's view on it. Manisha Gupta joins in. Morning, Manisha. Crude and, of course, other commodities as well.
Well, thank you so much for that, Lata. But let's start with crude because it doesn't really complete the whole thing. Trading at $71 per barrel as we saw a 3% surge overnight. We are back around those kind of levels that we started this year with. Even after we've seen 15% of a correction, we are back around those 71 kind of levels right now. So easing concerns between US and China, the weakness in US dollar, the Syria concerns, all of that really seems to be adding on to the prices. And we also have seen the OPEC compliance higher. The OPEC and allies output for the month of March was the lowest in 11 months. So it really all has been adding, and we are holding around those highs right now. The expectation also is that with the kind of sanctions that the US is looking to put on Russia, that could be an added factor there as the market are looking at supply concerns from various commodities from that place, and that has been supportive. Most people still do believe that you will see the crude oil prices trading within that 60 to 75 range. There are some far and few reports which do suggest that we perhaps could be headed towards 80 as well before this year ends. But that's exactly the kind of exuberance that you have seen in the metal space as well, with the copper prices trading at a 1-month high. You have the aluminum prices trading at around 4-month highs as well. This is after the near-term inventories on the warehouses have declined. Aluminum especially, which has gained up by 7% in this week. This is after the US import tariff uncertainty. You also have seen Rusal. Of course, we have seen the US sanctions come in on Rusal, but now the LME has stopped supplies coming in from Rusal into their warehouses, and that really leads to a decline in supplies, and that can keep that metal up for the rest of this week as well.
Okay, you're right, Manisha. If the Rusal case indicates that Russia is almost being treated like Iran. Iran was not allowed to sell oil, and now Russia is not being allowed to sell aluminum. It's something that the markets really have to come to grips with.
Yes,
it's a huge development.
It's a huge development. The only point I want to make is both on NALCO and Hindalco, and Hindalco in particular. We've seen a big rally for the last couple of days, and yesterday from the high point, if you see the intraday chart, yesterday if you bought in the morning, you didn't make money on Hindalco. In fact, it came off the highs, and if you see the futures open interest, that actually came off quite a bit. So there's been a bit of an unwinding that you've seen in Hindalco yesterday. So, again, chasing momentum may not work in some of these
Actually,
stocks.
maybe if technical experts are still with us, Sudarshan, how do you read the charts of Hindalco and Nalco?
Well, Hindalco is giving us some kind of a relief rally on the upside. I don't think it's a sustainable up move. So only day traders or 1 or 2 day traders should be looking to buy that stock. But there is some momentum. So buy on a dip for a couple of days of trade.
Buy on a dip is the advice. SP Tulsian of sptulsian.com is also with us. Mr. Tulsian, good morning. Are you happy with the revised offer on Fortis, or you think this needs to be revised further?
I think this needs to be revised further. Let me just quickly go through. Earlier they said that they will be infusing 4,000 crore, of which about maybe 1,800 or 1,850 crore was going for acquiring SRL. Same status remains. That means the Manipal and TPG will have that relief because they are not acquiring for 20% on 720. It will all look little complicated, but it needs to understand properly, because even I think that maybe print media report has not understood correctly, or I may be wrong. Let me have both the sides. So 1820 crore, now they will be only buying 1120 crore. That means that money is going out of that 4,000 crore which they earlier proposed. Now what they say that the merged entity will obviously be requiring money to repay those RHT assets which are being acquired, so they are proposing 4,000 rights issue. I presume that 50-50, because again the swap ratio is, there is a confusion. I'll come little later on that. The swap ratio of or maybe the effective stake of 50% by Manipal promoters, that is Ranjan Pai plus TPG, and 50% will be the public and other shareholders in the merged entity. So 4,000 crore both will bring in 2,000 crore. So there is no additional burden on the Manipal group and TPG, and they have now raised the enterprise value by about 21% for the Fortis hospital. That means it was earlier at 45% to 55%. Now it has been done for 50-50 for both Manipal hospital as well as for Fortis hospital. So when you will go for swap, the swap ratio will only increase by 10.5%. It will not increase by maybe about 21-22%, because some of the print media has reported that the swap ratio will rise from 10.83 for every 100 share to 13.1 share for every 100 shares. I am unable to understand and connect those figures. So the increase, effective increase now, or the whole exercise which will now result into that 57% will be held by the Fortis Healthcare in SRL. The SRL as it is, that is status quo, no stake dilution, but residual entity of Fortis will only be owning this 57%. So the holding company discount will continue to exist in case of that SRL holding, but even I am satisfied on that front. Come on the swap ratio is unlikely to raise beyond 10%, as I said. Take ballpark 10.83 instead of take 11. Maybe 11 will get raised to about 12.22 for every 100 shares. So I don't think that this is the sweeter. The offer seemed to have sweetened by the Manipal group, and I am not ruling out the counter offer from maybe Malaysia, IHH of Malaysia coming in for, or maybe Manipal have to go further, because if you take the effective bed capacity, revenue and all that, what Fortis have all along been losing is only the managerial input, because of which the EBITDA margin was seen to be little lower than what Manipal Hospital is enjoying. So still I am saying that there is upside room. In fact, this is what I have cautioned when this deal happened in the last week of March. I've said that the share may fall to 125. We use this as a buying opportunity. Still, I say that it has an upside potential if you hold, because this deal is unlikely to get through. I don't think that minority shareholders or even the shareholders, because practically in Fortis now everyone is minority shareholder. 99.3% shares are held by all non-promoters. So I don't think that even this deal is likely to go through.
So just a follow-up question, Mr. Tulsian, on that. Do you agree with the numbers that some of the analysis was pointing out that now with this revised offer, Fortis is being valued at about 155 rupees per share? Do those numbers add up? And then would you expect still an upside by either a counter offer or maybe even a further revision by the Manipal group?
See, again, I'm unable to understand this logic of 155. That's what I've said, that there have been many loose interpretation. As a financial analyst, I am not able to connect this. Take quickly, they say that 6,000 crore has been valued as EV for the hospital business. In the Manipal merger, take 60% stake, roughly at about maybe 2,200. This all both works out to 8,200. You take 8,200, take some loan of about maybe 1,300. It works to about 90 be 500 and you have 50 crore shares. So I'm unable to understand that how come this valuation seem to have been arrived at. So again, these are all, I don't think that these are all logical way of calculating the valuations. And I'm not going by the methods, because each assets which is going out of the balance sheet and which is remaining in the balance sheet has to be valued on an individual and independent basis.
Fair point, sir. Okay, let's shift to other stocks. Mr. Tulsian, good morning. What about the offer on MGL? Because of this offer for sale, does it dampen the mood on gas stocks, MGL in particular?
It's difficult to take a call that why British Gas, because 32.5% by each promoter is held by GAIL India, and this one, I think that this stake sale is going to get lapped by the market. There is huge value. In fact, if you compare between the IGL and MGL, maybe British Gas have their own compulsions. I don't know. I have not gone into that detail, but they are coming out and selling in some block deals, reducing their stake from 32.5%. So if you really compare the financials of MGL and IGL, I have always maintained that MGL has a better financials and at a competitive valuations, at a lower valuations than IGL. So this stake is going to get lapped up, and in fact, we have initiated a buy call today that use this weakness as a buying opportunity. The kind of swift rise which we have seen in case of Sona Koya. If viewers recall last week, Sona Koya, there was a slight stake reduction by the promoters because it exceeded 75%. Stock fell to 92 rupees and it again swiftly in couple of days moved back to 104, 105. And on the same analogy, we have in fact given a buy call on Sona Koya also last week at 94. So we see huge value in MGL. I don't understand why there should be any kind of disappointment merely on the stake reduction by one of the promoter, and this will get lapped by the institutional investors, get an up move in the share price. So in fact, based on this analogy, again, we have in fact given a buy call on the stock today to our members as well.
Okay, good I asked you that.
Absolutely. So that's a specific call on Mahanagar Gas. But Mr. Tulsian, if I were to extend the question to other gas stocks, because yesterday even the others were under pressure. Now, I don't know if that has anything to do with the city gas distribution bids that will be opened up. And on Petronet LNG, because we were talking to the regulatory board chairman yesterday, of course, there is this draft LNG policy, open access, etc. they're discussing. Is there any reason to worry, or is that too distant in the future? So it should not be any trouble for Petronet.
See, again, in fact, if you take a call, I don't understand why people are taking a negative call on Petronet, because ultimately Petronet LNG is the gas importer, and they have the, so whatever gas will going to get imported will be the infrastructure of Petronet LNG is going to get used, and that is seen to be having huge value. You have referred on the city gas distribution. In fact, yesterday when PNGRB chairman has come, in fact, this should be read now as a town gas distribution system and not city gas distribution system, because 78 locations have been identified by the PNGRB. In fact, in PNGRB, there was no quorum by the members. It was unfortunate that such a big body had no requisite members' strength, but that has now got fulfilled by the government, and now the acceleration in the process of the allotment of this 78 district or cities, whatever, it is unfair to call them as city. You should call them as a district or maybe as a town, is going to get spread. And in fact, maybe in the next 2 to 3 years, we are going to see 300 to 400 towns having the distribution of the natural gas. World over, the crude is seen lowering the production, but gas is ample production. Australia, once starts pumping in, throwing their gas production in the market, maybe from the 2018 end or 2019 first quarter, there will be ample supply and very low, maybe fall in the gas prices as well. And Petronet LNG in this background is holding huge potential. In fact, all the gas carriers, whether it is maybe GSPL or maybe GAIL or maybe Petronet LNG for that matter, because even in Petronet LNG, the Dahej plant is operating at 110% capacity. The Kochi plant have started, or operating at 11, 12, 13% capacity. So all these things are going to get ramped up. So in fact, we are extremely positive on the gas infrastructure plus the gas distributor. So as I said, in gas infrastructure, you have Petronet LNG, GAIL, GSPL, and in gas distributor, you have MGL and IGL.
That makes one positive on the economy as well, isn't it? Another small stock that I wanted to ask you, Mr. Tulsian, Federal Mughal, Carl Icahn is now going to sell that company globally to Tenneco. Now, should one expect an open offer? Nigel was pointing to that, but actually Federal Mughal already has 74, almost 75%. So under such circumstances, are open offers possible? Because they will breach minimum public shareholding, isn't it?
See, if this global events leads to the triggering of the open offer, it has to come. In fact, I've just given you an example of Sona Koya, where the domestic promoter, Kapoor, they exited and that their stake were bought by their counterpart Japanese promoter, and in that case, a stake exceeded 75%, and then they have to come out with the offer for sale. So same thing can happen in Federal Mogul, but if you really see, the Federal Mogul is an extremely excellent company, and in fact, I don't think that even if that open offer will get triggered, which will be more as a statutory compliances, then I don't think that there will be any kind of tendering, because the kind of loyal shareholders, and for a hypothetical reason, if we presume that promoter exceed their stake to 70%, then in the next 6 months they have to bring it down again back to 75%. So if because of the global acquisitions or global merger restructuring, if anything happens, then open offer will get triggered positively because as a statutory compliance, but then they have to bring it down again back to 75% in the next 6 months or so.
Okay, got that, sir. We'll allow you to catch your breath and meanwhile invite our F&O expert, Amit Gupta, Head of Derivatives at ICICI Direct, has joined us now. Good morning, Amit. What trading strategies do you have for us?
See, I think a few auto components are looking much better right now. If you look at the sales figures recently, that was very encouraging. And afterwards, we have seen that even the battery components like Exide Industries has started, reverting on the back of very good closure of short positions. Now, Exide in comparison to Amar Raja batteries in the last 1 year period has always outperformed. And that outperformance was seen because it did not decline below 200 levels. It just remained in the range of 200, 230 for some time. And it spent almost 7 to 8 months in this range now. And now, if you look at the open interest, we have seen almost 35% closure in the last 2 or 3 series, which is a clear indication that the positional short traders are exiting from the stock, which can provide a good momentum on the higher side. It can move towards 255 in the coming sessions. Now, coming to the trade, the implied volatility of the call options is very low in Exide, just because the people were hedging their cash portfolios by writing the call options so far. And 240 call strike has been the highest. My sense is, looking at this short covering in futures, it should pan out in options also, and that is why 240 calls should see the closer and implied volatility should start moving higher, and that is why the current premium of 4 rupees, it should move towards 10-11 rupees in the current series. So one can utilize this by buying this call option or 240 strike and just sit. I think possibly in the coming 1 or 2 weeks you will start making money in this particular strike.
Okay. All right. Amit, can you wrap up your other picks as well?
Yeah, so from the auto components itself, I think the another one is Bharat Forge, where we are expecting good set of results. In fact, the trigger started in the stock from the class 7 trucks, which were giving good figures in US. And 700 was a level which we saw in 2014-15, and after 2 years it has taken out that level of 700, and that is why whenever it is declining below 700, we are seeing an excellent delivery pickup. If you look at the last 3 or 4 months period, though it remained near these levels, it declined from almost 780, but the delivery pickup has increased to almost 60-70% on few sessions. So my sense is the strong hands are entering whenever it is declining below 700. So that is a base case formation now for the stock, and it is not too far from those levels yet. So one can initiate the long positions, and I think it should eventually move above 800 levels. The open interest has already declined, so the leverage perspective, the stock is not too heavy, and that is why I think despite nearing the life highs, it should not fall much, and eventually 800 kind of level should be taken out. And from the Nifty heavyweights, we have recommended to our clients ITC, because ITC, I think the same feature where whenever the stock declines below 260, the excellent delivery pickup starts. In fact, the recent weather predictions have been good, and that is why since then, I think almost 80%, 75% of delivery pickup on few sessions we have seen in ITC near 262 to 261 levels, and from there it has started moving up. 270 call has been the highest. The reason is very simple. The people were shorting this particular call strike against the cash positions in ITC. So my sense is there should be a closer starting in 270 call. So we have recommended for a target of at least 278, 280 levels ITC. I think in the coming 1 or 2 months, these levels should be met, and the decline should be very, very restricted. And Nifty has already fallen by 11%. The stock stock has remained near 260. So that shows that some, buying definitely is emerging near 260 levels now. And that is why I think what should remain buyer in this Nifty heavyweight right now.